Commodity prices are hot right now, and prices are surging. But the impact of these price increases on our everyday lives is a bit more tenuous than most people realize. When the price of things like Arabica beans rise, you might assume that's going to bump up what you pay for a cup of coffee from your local barista. But the price of coffee at the coffee shop actually has little to do with the price of the underlying commodity. Some commodity prices do drive the rate consumers pay, but for others, the correlation is pretty small. I'm gonna highlight a few examples, and I'll explain what you should really be watching to tell you the direction of consumer prices. With some commodities, when market prices rise, that's going to move prices at the store. Lumber is a great example. When prices rise in the lumber market, you see it pretty immediately on the shelves. Lowe's famously installed digital price signs in its lumber aisles, so the company wouldn't have to constantly change them during the day. With lumber, what's traded is mostly purchased by consumers, rather than broken up and financialized through contracts on exchanges. Propane is another example. Prices for home tanks and cylinders move largely in line with commodity prices. The price of oil is pretty tied to gasoline and diesel prices, but other factors like taxes and labor costs do play a role. But with typical everyday products, it takes time to convert the commodity into the retail goods we buy, and manufacturers often lock in prices months in advance. That's true for ingredients such as corn for tortilla chips, or wheat flour for bread, or the cotton that goes into clothing. The price you pay for a cup of coffee at Starbucks is really more about the paperboard that's used to make the cups. Those prices have jumped recently, and that's a bigger reason for the higher prices you're seeing at the coffee shop than the coffee beans themselves. And the rising cost of wheat won't affect beer prices right away. Much of that cost comes from aluminum cans and the cost of energy and shipping. If you're trying to get a grip on which commodities really move the needle, here are a few you should watch. The first is corn. Corn is in just about everything, because it's the chief ingredient in the high fructose corn syrup that's in products ranging from bread to barbecue sauce, and many juices and sodas. Corn is also a major input for ethanol, which is used in gasoline, so higher corn prices often mean higher gas prices. You should also watch oil. Higher gas and diesel prices make it more expensive to transport products, and to refine things like plastics. Last, but certainly not least, is copper. Known on markets as Dr. Copper, it's long been an indicator for the overall health of the economy because it's used in just about everything. Housing, electrical equipment, even motors. Copper prices for home builders, exporters, and manufacturers are generally very tied to the price on commodity markets. So when you see copper prices going up, that's generally a good sign that consumer demand is rising, and we're seeing a strong economy. Rising commodity prices are playing a role in the high level of inflation we're seeing, but maybe not in the places people normally think of. If you're watching the market for signs that your favorite products are going to be getting more expensive, make sure you're looking in the right places. If you enjoyed this video, hit the like button and subscribe to keep up with my latest videos on markets and the economy. I'm reminded of College Park's own Gunna, who says, "My new condominium is dressed. I see VVS's and baguettes. I'ma get these commas and invest." I'll see you next time.